there are two other classes of assets: digital currencies like stable coins, and there are also digital securities that are issued by entrepreneurs and companies. The regulators are going to shut down the digital securities. There's not really any support for them. And there's not any support for digital currencies either. They don't want large amounts of dollars to circulate outside the control of the US banking system. So of the three asset classes, the one safe haven for institutional investors that has the most regulatory support is Bitcoin as that king digital commodity. I expect that the rest of the crypto industry will continue to rationalize, and these other assets will gradually be decapitalized over time.
Michael Saylor, the executive chairman of business intelligence and analytics firm MicroStrategy and a big Bitcoin advocate, believes the end is quite near for the rest of the cryptocurrency industry in and out of the United States. Saylor, a renowned personality in the Bitcoin community, predicts that the ongoing regulatory crackdown against what he describes as crypto securities and currencies will continue to worsen until such projects are out of the United States and start the inevitable descent into complete decapitalization. Saylor expects the whole process will be much faster than everyone thinks, and it would help institutional investors currently on the sidelines shake off their doubts about Bitcoin and invest some percentage of their very large portfolios in the leading digital asset. Saylor's assessment of the situation quite aligns with some signals U.S. regulators have been sending since the FTX collapse late last year. A few days ago, Gerber Gruwal, the director of the U.S. Securities and Exchange Commission, SEC Division of Enforcement, said the crypto industry was built around non-compliance. According to Gruwal, the SEC had to change its strategies towards suitably regulating the industry after it had worked thoughtfully and incrementally without any success in regulating the cryptocurrency industry. The regulator believes the cryptocurrency industry is a minefield of unregistered securities offerings primed for many more multi-billion-dollar collapses. While speaking at a New York event earlier this week, Gruwal said, "Even if you came up with a bespoke rule set, you have an entire industry where the ethos is built around non-compliance. Typically, you'd also see compliance, but we're not seeing that in this space, so we had to change strategies." With the change in strategies, the regulator has gone after several crypto-related firms and products, the most significant being its most recent twin lawsuits against crypto giants Coinbase and Binance. On June 22, lawmakers on the House Financial Services Committee will have a hearing to discuss oversight of the SEC, but that might not do much to quell the regulator's vendetta against the industry. The outcome of the regulator's case against Binance and Coinbase will also, to a very large extent, dictate whether or not and how the cryptocurrency industry will be allowed to operate in the United States in the future. According to Michael Saylor, Bitcoin investors don't have to worry about regulators, the asset's many interesting and impressive qualities, or the strength of the underlying network. During a recent interview with Bloomberg, the MicroStrategy executive chairman highlights Bitcoin's many qualities as a long-term investment instrument and why it is the perfect asset to escape the inherently corrupt fiat system. We will now bring you clips from the interview. Please watch, share, and like this video. Also, ensure you subscribe to the channel, turn on post notifications, and drop your comments and observations in the comments section below. Thanks and enjoy the video.
Well, Bitcoin represents the only universally acknowledged form of digital property or in the world. So if you're looking to own a piece of property that you can move to 100 different countries where everybody in every country is going to want it, and if you want a piece of property that people will want in 100 years, Bitcoin represents that universal global asset. There's no building, there's no stock, there's no company, there's no commodity that will last 100 years that you can move from country to country. So for global citizens that are looking for wealth preservation over the next 100 years, and they're not quite sure about the economic policy of any country or about where they'll be, and they want something scarce, desirable, that some affluent person is going to want to buy from them no matter where they end up, Bitcoin represents that asset. Well, I think that there's universal acknowledgement that Bitcoin is the king digital commodity. It's an asset without an issuer. And so for that reason, the regulators in the US aren't bothering it. I think the key to keep in mind is over the past 2, 4, 6, 8 years, Bitcoin is outperforming gold, silver, bonds, all currencies as a monetary inflation hedge. So if you live in the United States, the US dollar has been losing 7% of its value every year for 100 years. And over 100 years, you lose 99.8% of your value if you don't switch to a scarce, desirable asset. But if you live in another country, Turkey, Argentina, et cetera, in many cases, I think the Turkish lira has lost 96% of its value against the US dollar in just 20 years. So the real key is to switch out of the weak currencies, whether it's the lira, the Lebanese pound, the Argentine peso. But switching to the dollar is only a short-term solution, because holding the dollar more than a few years will cause you to suffer monetary debasement at the hands of that currency. So Bitcoin represents a way to buy a property that's going to go up in value. It's going to appreciate faster than the monetary inflation rate of either the dollar or local currency. And the other thing that's very appealing about it is you can take custody of it or place it with any number of international custodians. And of course, you can't really easily take custody of any other asset. So if you want to eliminate counterparty risk that comes from having all of your assets with a bank, or having all your assets in a single country, or all your assets denominated in a single currency, Bitcoin is a way for you to exit economically from that system and from those counterparty risks. The thing that backs Bitcoin is 400 exahash of digital power. To put that in perspective, that's as much power, energy, as the entire US Navy uses in its fleet, about 12.5 gigawatts. And also, it's a fleet of 5 million Bitcoin ASIC miners spread everywhere in the world that generate so much hash rate that if an AI took over every computer on Earth, all the smartphones, all the computers at Amazon, Google, and Microsoft, all of those computers couldn't dent the Bitcoin network. It's an extremely powerful digital energy network. And because of that, you don't have to put $1 billion in a bank that's run in Lebanon or Argentina or the US or Turkey. You can put the $1 billion onto the Bitcoin network, and the Bitcoin network is nation state resistant. If all of China turned every computer against the Bitcoin network, they couldn't stop it. And so Bitcoin represents a new way to store your assets, and in fact, the most secure computer network in the world.
During his interview, Saylor stresses that Bitcoin's role right now is not to completely usurp a country's local fiat currency or the global currency, a position which the US dollar currently holds. Instead, the MicroStrategy executive chairman sees Bitcoin as a long-term investment tool that can serve two very important functions. One, you can hold it for several decades without fear of debasement in value and pass it down to the next generation. However, it can also serve as a nice egg nest for you if the eventual collapse of your local fiat currency or even the US dollar happens faster than anyone predicts. Let's get back to the interview, as Saylor also discusses another important Bitcoin functionality, helping to secure cyberspace using the world's most secure and strongest digital network.
I think the key to keep in mind is that every citizen of the world needs three types of money. They need local currency, like you need the Turkish lira in order to pay your taxes and buy things locally. They want the world currency, the US dollar, to buy things internationally. And then they want a property that they can give to their children and their children's children that will last 30 years or 60 years or 100 years. Bitcoin represents the property. The US dollar represents the world reserve currency. And then your local currency is determined by the jurisdiction you live in and what your local taxes and your local expenses are denominated in. You don't need to replace the local currency, nor will you. And it's not going to replace the dollar either. What it's replacing is that building or that farm you are going to buy, or that company you are going to invest in, or a bar of gold. And compared to that bar of gold, which is not going up in value in dollar terms, Bitcoin is actually outperforming by a factor of 100 or more. So Bitcoin represents that long-term asset, not your checking account or your near-term local payments. We live in a world today where AIs could spin up 100 million fake Michael Saylor accounts. And there's no cost to create a Twitter account or create another fake account or create an email account. So it's important that we actually have some way to anchor your account into cyberspace such that you have some substance. And the approach with Bitcoin is to take your credential, say your identity, your public and private key, burn the public key onto the Bitcoin blockchain, which is the most immutable, incorruptible, indestructible, immortal database in the world, and then use your private key in order to sign your transaction. So if I wanted to digitally sign this video interview to prove that it was me, or if I wanted to digitally sign my Twitter account, or my WhatsApp account, or an iMessage account, or my email to prove it's me, I could use a private key that's linked to the public key on the Bitcoin base layer. And as I said before, if you wanted to corrupt that database, you would need an entire nation and you would still fail. And so whatever's on the Bitcoin base layer will be there in hundreds of years, even long after nations and companies fail. That's why Bitcoin represents this immutable form of truth. And it's more important than ever to have that veracity, because an AI could actually be a better version of me. It'll work a million times harder, and there'll be a million versions of them. And you're not going to be able to tell the difference unless you've somehow registered your cyber credentials on an indestructible, immortal, incorruptible database.
On the regulatory crackdown against Binance US, the crypto giant and the SEC reached an agreement a few days ago to nullify the regulator's previous motion to freeze the exchange's assets. The consent order ensures that Binance is more transparent in its dealings in the United States and gives the SEC more regulatory oversight of its activities. As a part of the agreement, Binance will also ensure that only the 2 U.S.-domiciled companies that operate Binance US can maintain possession, custody, and control of all fiat currency and crypto assets that are deposited, held, traded, or accrued by customers in the United States. According to John Reed Stark, the former chief of the SEC Office of Internet Enforcement, the agreement is unprecedented, exhaustive, and onerous. While reacting to the agreement in a Twitter post, Stark said, "This consent order will be one of the most burdensome, awkward, inconvenient, and far-reaching crypto-related orders in the SEC history. The SEC has been given a role akin to a Binance independent consultant, a remedy often granted to the SEC after the SEC prevails in an enforcement action. As per the agreement, Binance has 45 days to give the SEC a list of every account or wallet under its management since December 1, 2022, along with associated financial institutions and account numbers. The crypto exchange must also provide a record of asset transfers greater than $1,000 in value in that same time period, along with recipient names and reasons for the transfer. In addition, Binance US agrees that neither Binance nor its chief executive officer Changpeng Zhao will have access or control of assets, directly or indirectly. Finally, the SEC will get monthly reports of ordinary course business expenses Binance US. Failure to comply with these terms will have the exchange slapped with obstruction-related charges. What are your thoughts about Binance and the SEC agreement? Do you think this sets the stage for how the rest of the industry will be regulated in the United States? Please drop your replies and comments on Michael Saylor's interview in the comments section below. Also, ensure you smash the like button, subscribe, and turn on post notifications for more videos. Thanks for watching.